Good morning, guys. Happy Friday. It is January 17th, 5:27 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. Brian Split is here. Brian, you guys are doing a meeting in Nashville on February 2nd and 3rd. Why don't you tell us about it?
Yeah, so every year we've been doing this conference for our clients and prospects, and just to get a idea of what we're looking at for the year. I will be doing some charting as I typically do for Joe's premium subscribers, and we're going to have a lot of other good speakers. Eric Norland from the CME Group, the chief economist, is going to give a big picture outlook on what he's seeing macroeconomically. A lot of focus, obviously, on the grains, but February 2nd and 3rd, and that's in Nashville at the Renaissance. Go online, www.agmarket.net. There's a banner right at the top. You can register there. I would say that the hotel block, as far as the discounted rate, that does end tomorrow on the 18th. So if you do want to get registered right away, please.
We will be doing a live podcast taping on Sunday at 3:30. So I'll be there. Mackenzie will be there. This is one of two occasions throughout the calendar year that I venture out from behind my microphone to visit the people. So if you'd like to meet me, and I don't know why you would want to meet me, I'm not interesting or exciting or anything, but I will be there. And we did a live taping last year. It was pretty cool. We're going to do it again this year. Let's jump into our first story. Farmers have sold a lot of corn, apparently.
That's what Reuters says. Reuters reported that U.S. farmer selling of corn and soybeans increased this week. The uptick in selling follows USDA's report last week, which reduced the 2024 corn and soybean production estimates. Even with the recent rally in the grain markets, profits remain low, and the year ahead looks challenging due to rising input costs. According to Reuters, farmers' income has declined by nearly 23% since 2022. Farmers are also concerned about the potential impact of President-elect Donald Trump's proposed tariffs.
Beginning, I think, like middle of last week and maybe even before that, Brian, I think the farmer selling of old crop bushels accelerated, and I think it accelerated even further following the report. Would you agree?
I would. Yeah, I would say that the farmer selling accelerated into the end of 2024. And after that run higher from the report where the yield was reduced nearly 4 bushels per acre, we saw another notch up in values. And I can confirm again, our partner company, John Stewart and Associates, works with the commercial side, and they would very well back this up, that the producer activity has been very high as of late.
Spot month corn futures traded their best level since December of 2023, just this week, 479 and three quarters. That's something that's got to be on the mind of the farmer. We haven't seen these sort of prices on the front end in a long time. Now, basis levels widened out, and that's partially a function of all the farmers selling, I would imagine.
Correct. Yeah. Basis levels. I talked to a few producers, even on that report last week, where the futures were up 15, and basis might have dropped, 10, even 15, taking away a lot of the rally as far as the cash market goes. So producers have been laying into this. It seems like from what we're hearing on the JSA side, the end user has coverage several months out to April, May at this point. So I think you're going to continue, if the futures market does go higher here, basis will continue to suffer from that.
Okay, so farmers have sold a lot the last few weeks. Is that a wise or unwise move?
Only time will tell. I think it's wise in the respect that the market is obviously well off the lows. Can the market continue to go higher? I'm not going to say that it can't. I do think that if the market does go higher, then there's going to have to be a focus on the new crop. So what we're talking is old crop activity, not necessarily new crop. And I think if we can get another leg higher, and we'll see if we do, but I think that's where producers really need to start laying off some new crop risk.
You got to remember that carrying grain, physical grain, there's a lot of restrictive type things. Interest rates are much higher. So if you've got money borrowed against bushels that are unsold, you're paying interest essentially per month. Chris Barron does a calculation, and if you've got an operating line that's like 8%, you might be paying 4 or 5 cents per bushel per month to store corn and hold on to it. And God forbid that you're paying commercial storage. I mean, you could be paying just a fortune in fees and interest to carry grain forward. So even to carry grain to this point, I mean, from harvest to this point, you may have already paid a lot of money in interest and storage.
Correct. And then, you kind of take a look at the curve, and there's some carry from March to May. It's not the best, but then you look at like May to July, and I think there's only been about, maybe 2 to 3 cents of carry there recently. So
Yep.
it's not necessarily paying you as of right now to continue to keep the grain in the bin with the structure of the market currently.
Soybean futures sold off yesterday. Let's talk about that.
So the nearby March 25 contract lost nearly 25 cents per bushel and has given back a good chunk of the gains associated with last week's USDA report. An improved weather forecast for southern Brazil and Argentina may have been responsible for the selling. While the U.S. supply and demand situation is tighter than previously expected, the global situation remains hugely burdensome.
This is my simple chart because I'm a simple man, but maybe some trend support near 1004. I don't know. What do you think in terms of this soybean chart, Brian? What does it look to you following yesterday's sell-off?
So I think it's evident we still have the uptrend in place. We have not violated that. We did hit some resistance, and I no doubt they ran some stops above those November highs, but then they closed back below it. I think something that's important, and it's the 100-day moving average. If you think back to those highs that we had in late September, that was against the 100-day moving average. Those highs in November, which were made from a bullish WASDE report where the USDA lowered bean yield, that peak was made against the 100-day moving average. So what we've seen recently, this run up from the report a week ago, we got above the 100-day moving average. And yesterday we kind of came back down and we're testing it from above. We did close a hair below it, and now we're seeing a little bit of buying that's got it back above it. But that would be the main difference of what we've been seeing since, again, September, because we hadn't closed above the 100-day moving average in March beans since May 31st. And again, we did it Friday on the report last week. So I'm wondering, and you made a really good point on corn, Joe, when the fund started to go long corn. They don't just go long just to go right back to being short. So I think the funds are probably, long, maybe 50,000 contracts in that ballpark. And did they get long just to go short again, or is this something where they may end up building a little bit of a long position over the next couple of months?
Okay, I wanted to show you a new crop chart. I guess I threw it out. I had a NOVE chart. I don't know where it went. Let's look at this. We got a U.S. situation in soybeans, supply-demand situation that is not, I wouldn't call this extremely bearish by any means. And in fact, it's a little bit tighter than what we had expected. But then you look at the global situation, and I pulled ending stocks to use ratio and also just ending stocks. I mean, extremely burdensome. So which one's more important? Is the not tight, but like not super tight U.S. situation, is that more important, or is this global situation the bigger thing?
I would generally put weight on the global situation, and I think the record high stocks is one thing, but it's generally it's the stocks to use that is always the most important number, and it's not the biggest, but it's the second. So I just think that's going to keep a lid on rallies, but there's a possibility that something could be happening in soybeans similar to corn that's happened over the last 5 to 6 months, and we've priced in a awfully large South American crop, and is it possible that it's not as big as we think? And I think there's been some talk recently about, yes, they've had a lot of rain there, and that's been good. The moisture content is there. But with that and with all those storms becomes a lack of sunlight. Are there going to be some quality issues? And does this crop, kind of get a little bit smaller over the next couple months as we go through harvest and really see what's there? And maybe that's what the funds are sniffing out. But again, we may not get confirmation of that for a little bit yet.
One thing that I might note with regard to the U.S. situation is that we, in all likelihood, will lose a lot of U.S. soybean acres this spring, and we're probably going to gain a lot of U.S. corn acres this spring. You could see this U.S. situation tighten up a little bit, but then again, if Brazil and Argentina are really big, maybe we continue to lose export business. I don't know. There's a lot of different ways this thing could go. Let's jump to South America.
So AgroConsult slightly raised its forecast for Brazil's soybean crop ahead of its yearly crop tour. The consulting group estimates this season's crop at 172.4 million metric tons, up from its previous estimate of 172.2. Soybean acres were left unchanged at 117.4 million acres, which, if realized, would set a record as the largest ever in Brazil. The exchange attributed the favorable production outlook to ideal weather and planting conditions in most areas. However, there are harvest concerns in central Brazil due to excessive rainfall. Additionally, yields are expected to be reduced in southern Brazil due to dry conditions.
It seems like general consensus is something in the low 170s. Conab came up this week. There's one of the private groups that reduced their estimate, but I think the general trend has been higher. Is that what you're seeing, Brian, with the estimates?
Overall, yes. And I think that private group was their number maybe like a 166 and some change. I thought was if we're talking about the same one, but I feel like it was maybe 4 to 6 weeks ago. Some of the talk was trying to push it into the upper 170s. I don't know if that's necessarily going to be the case with again Central and Southern Brazil having their own particular issues. But it's going to be a very big crop. And that's kind of what I'm battling with mentally is, again, the point of the funds having just gone long and do they just abandon that immediately to go to short? But you would think that just the sheer size of this crop and the discounts that we're going to be seeing in Brazilian cash values versus U.S. values is going to really make the export side of things difficult for the next couple months to come.
I think, okay, so let's look at Brazil weather. Really moving forward, I don't see a threat here. You're going to be back to normal with regard to rainfall in southern Brazil where it's been dry. And then like your Mato Grosso places further north where harvest has actually begun, you're going to run slightly below normal with regard to rainfall. So I don't see a problem here. I think this map kind of illustrates maybe what happened in the soybean market yesterday. This forecast for southern Brazil and Argentina shifted substantially wetter, I think, and the rains are going to come back tomorrow and they're going to run through the 10-day period the way that it looks. So I think that the return to maybe a slightly wetter pattern in southern Brazil and Argentina, that may have had something to do with yesterday's sell-off.
I agree. I think the weather element is what kind of kept the pressure on soybeans all day. There was an element yesterday of selling in general, and not just in grains, but we had livestock markets were down, energy markets were down, and there was kind of a common theme that they did finish lower, but they also finished off their lows, and the soybeans were really the only ones that they just kept pressing it all the way into the close, making new lows late in the day. And I think it's the weather element of that.
All right, we've got some potential policy news here.
Donald Trump's nominee for Treasury Secretary defended the administration's broad tariff proposals yesterday. Scott Bessent appeared before the Senate on Thursday for his confirmation hearing, with tariffs being a key topic of discussion. Bessent stated that Trump's tariff plans would be implemented in the months ahead. He also noted that the tariffs would generate revenue and serve as a negotiating tool to address unfair trade practices and geopolitical issues. Some senators raised concerns about tariffs increasing inflation, but Bessent minimized the costs and reiterated his support for using them strategically. Although the hearing was somewhat contentious, the Senate is expected to confirm Bessent.
One interesting thing about Scott Bessent is the way that you pronounce his last name, because I've heard different news outlets pronounce it different ways. Some people say it's Bessent, and that's how Wikipedia says to pronounce it. And then, but then half of them say Bessent. So I have no idea. I think it's Bessent, but I don't know. One thing that he mentioned yesterday, he talked about the previously agreed trade deal with China. And Scott Bessent, I think, said this: China has not made good on their ag purchases. He said he's going to push Beijing to resume those purchases and maybe even pursue a makeup provision. What if we're all wrong about the tariff threat to the bean market, Brian? And what if it's actually the opposite?
What if we just get pressed right into phase 2 of the trade deal?
Could you imagine?
Positive, right? Because that is the exact opposite of what the narrative has been.
Mm-hmm.
It's possible.
Crazy.
I know it seems like some of
what he said.
Right. Some of the talk here recently is that, tariffs are going to start slow. They're going to be gradual, and it's really just going to be kind of a pressure to come to the table and deal. So they may not be super aggressive right away, and they may have the understanding that they're going to get worse over time. But if they start soft and then there's some negotiation and we end up in the short term with some positive outcomes, that maybe it's not as bad as we think.
He also said China's in a recession and said that, I think it's so many words, said that maybe they're not in a position to fight this trade war. I don't know. One thing that I like about this Treasury pick about Scott Bessent is that he's a trader. He understands markets. He was a hedge fund manager. He understands, if you asked him, if he was on the show right now and we were talking about corn and soybean futures and all this, he'd be able to sit in and talk about it as a market person, which I think is maybe a good thing for our crowd. I don't know. Does that make sense?
Yeah, let's get him on the show.
Yeah, we'll see what we can do.
Yeah.
U.S. corn export sales improved last week. Net corn sales surpassed pre-report expectations at 40 million bushels. The print was up significantly compared to the previous week, but unchanged from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales were reported at 21 million bushels. The print was up substantially from the previous week, but down 27% from the prior 4-week average. China was the largest buyer for the week. Net wheat sales exceeded expectations at 19 million bushels. The print was up noticeably from the previous week and up 55% from the prior 4-week average. South Korea was the largest wheat buyer for the week.
I don't have a ton to say about these sales in particular. Soybean sales are supposed to drop off this time of year. That's what happens, trade war or no trade war, just because Brazil comes online. I think there is some concern, Brian, with regard to Mexico. Trump's going to do some tariff stuff on the first or second day, I think. Mexico's bought a ton of U.S. corn, and there's a lot of it that's unshipped. Is that something we need to be concerned about?
Well, so they weren't the number one buyer. They did an awful lot of buying. So that would be question number one is has our number one buyer gotten enough bought?
Mm-hmm.
I don't know if they're going to cancel because they got it bought at such lower levels that again, if there are, and I honestly don't know how the tariff stuff works, right? So
Nobody
how does
knows.
it get implemented where are the tariffs implemented on what hasn't been shipped yet? Are they trying to get as much shipped before the tariffs kick in? Are the tariffs on new business? And that's why they've been trying to get as much bought prior to this happening. But however you lay it out, the pace of sales we've had has been really, really good. Is it sustainable? We are actually going into the period of year where generally the corn exports kind of take over for soybean exports, but they've been really good for the last several months. So it's been, unseasonably strong early. I don't know the answer to this, but I do think that there are some vulnerabilities here. And then again, when you kind of look at the size of the fund length, there could obviously be, a change in the story right around the corner.
You got to hand it to the Mexican corn importer. I think they played this thing very well to this point when you look at what the market's done.
Yeah, I mean, it seems like they had a better handle on our crop than the USDA did. They knew to come in here and buy it early. They started buying at the end of summer near those lows while the USDA was raising yield, right?
Soybean sales are on track to hit USDA targets. Again, could you see China cancel some? I guess you probably could. Maybe that's an inevitability if Brazil's big enough. Wheat, I don't really have much to say. What else we got here?
We got the drought monitor. Precipitation was minimal across the Corn Belt last week, and as a result, drought conditions remain largely unchanged, with the exception of improved conditions in central Indiana. The High Plains received limited precipitation, and much like the Corn Belt, conditions were mostly unchanged for the week, with the exception of conditions worsening in southwest Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn 42%, soybeans 34%, winter wheat 22%, spring wheat 45%, and cattle country 32%.
I've been told, Brian, that the big expansion in corn acreage will happen in the Western Corn Belt. And in the Western Corn Belt is where you have more drought. You look at Western Iowa into Nebraska, into South Dakota, places like that. Southern Minnesota is a little dry. I don't think this is a market impact thing right now, but I think farmers are concerned, at least aware.
Yeah, I mean, producers are going to be concerned about the potential for drought on any given year. From a trader standpoint, it's hard to look at this map and be in January and get too worked up about it. Yes, there's drought conditions, but when you look at the level of drought, for the most part, it's abnormally dry. There's some moderate drought. You had some of the more extreme drought further west, but not necessarily in the major production regions. So I think when we're talking about a concern of overall drought in the Midwest as we get into the growing season, just what we've seen previously is you think about 2012, it has to start. It doesn't have to, but that one started in Texas, right? There's a little bit of extreme drought in Texas, but the whole state was covered in extreme drought in 2012, and then that moved north into the Midwest. We just don't have that right now, so I really want to see kind of how Texas develops over the next couple months and as we get into the growing season. But this right here, it's not something I would be super worked up about currently.
We had some flash sales yesterday.
We sure did. U.S. exporters sold 5 million bushels of soybeans to China for delivery during the current marketing year, and exporters sold 5 million bushels of corn to Taiwan for delivery during the current marketing year.
We shouldn't see too many more flash sales of soybeans to China. Early Brazilian harvest has begun in the north. If you look at the cash market, global export market, February forward, Brazil's like $1 discount to the U.S. Gulf. So you're going to see a little bit of this maybe for another couple of weeks. I couldn't imagine that it lasted much longer, though.
Right. We talked about that earlier in the segment that we are going to have a rather sharp discount Brazil to U.S. as far as cash values. I was told or it was suggested that some of this recent buying of soybeans by China, because we had a couple of days of some 198,000 ton purchases, then we had the 132. Is it them buying some very high quality U.S. soybeans to potentially blend with some of the possible lower quality beans that might be coming out of some of the early part of harvest here? We'll see. I don't know.
What did cattle prices do yesterday?
Cattle futures were sharply lower. Live cattle were 92 cents to $1.92 lower. Feeders were $1.77 to $2.07 lower. Box beef was mixed. Choice was down 73 cents at $333.41. Select was up $1.34 at $319.38.
Brian, I pulled some long-term cattle charts today. This is a multi-year bull market in cattle and also in feeder cattle. Can you remember a commodity outside of like maybe gold or silver that just trends higher forever? I mean, that's maintained this sort of strength for this long, like an agricultural commodity.
Not the 5-year type of a bull market. This one has lasted very long, and rightfully so. We just haven't been able to really change the fundamental story. We've seen weights increase, and that's helped keep up with it. But just the numbers out there, they're still very tight. So when I look at this, I will say again, just in any market where there's record length, it is vulnerable to a shift in the narrative, and we've seen that story happen before in numerous markets, whether it's record short or record long. When it shifts and it turns, we know how that story ends. But as of right now, the feeder market, the cash market's been really strong. When you think about live cattle, the cash market there has been strong. We're trading at a discount to where the cash is trading in the futures. So it seems like the market should go up, but that's how the market kind of can set traps for people. Where hey, the cash is up here, we should keep buying the futures because it's going to go to cash, and then it doesn't. Something changes and it traps people long near the highs. I've been looking at the April live cattle, and it's interesting. Like I was back in 2023 in September before that hard break into December. The April live cattle got very close to 200, and it just couldn't get through it. And I'm watching this 200 area on the nearby April of 25 futures because we've kind of gotten back up in that area. I think if you could crack that 200 nut, that it's going to look good and might bring some more buying in. But in a big picture sense, April as its own contract, it has had a difficult time with 200. It'll be interesting to see if we can get through here because the cash would suggest it should.
All right, guys, everybody have a nice weekend. Remember, everything's closed Monday. We'll be off Monday. We'll be back on Tuesday. Talk to you then.